Hearty good morning, ladies and gentlemen, and a warm welcome to all of you to the 5th edition of the Global Fintech Fest. My name is Kavya R. Chavali, and it's an honor to gather with such a distinguished global audience, as we all know that this event is a testament to our collective commitment to building a financial future that is inclusive, responsible, and resilient. Before we get started, once again, I'm going to request all our members of the
Good boys or
We'll see. We'll see. We'll start with you, Shailendra. Can you please demystify what, according to Peak 15 or according to you, is the word fintech, and how do you classify this industry in the way you'll see it?
Kunal, thanks. Hi, everyone. I'm Shailendra Singh. I'm a partner at Peak 15. I started at the firm, earlier called Sequoia India. I started at the firm in Jan 2006, so it's now 18 plus years of doing this. I've known both these gentlemen on my right and left for over a decade, and I'm very privileged to be shareholder in both companies, just sharing a bit of context. Kunal, that's a very loaded question. So thank you, everyone. Privileged to be here. Very loaded question. How do we think of fintech? Look, there's two big founders sitting on my either side, and the head of our very esteemed regulatory of NPCI. So I feel we should ask this question of other people. I'll just give my quick context of how I think about it as an investor. I think fintechs try to offer four key propositions, and all companies fall in somewhere in this bucket. And at least that's how we think of it. We think of flow-based businesses, which are payments businesses, which provide the proposition of moving money or the transfer of value. We think of stock-based businesses, which have balance sheets. They may involve lending, NBFCs, banks, and so on. We think of software-based businesses, which provide infrastructure for everything else to happen. And we think of workflows as a key enabler. So workflows might be enabled by software. Workflows may involve the flow of money, or workflows may involve the creation of a balance sheet, etc. But all the propositions eventually boil down to these four areas. And we constantly look for new ways that companies can address the needs of their target customer. It could be consumers or merchants that will try to build around these four vectors. And India is a very special country because of all the innovation that happened with NPCI. If you haven't seen Amrish's tweet from this morning, I think it's become the viral tweet of the day. So I think India is a very unique country where our regulators sort of provide a pretty insane product roadmap themselves with everything that's possible in India. And then I think the fintech ecosystem or the startup ecosystem can build on top of that. So that's my quick thoughts, Kunal.
Perfect. Amrish, I'm going to come to you last. I'm going to ask Dilip this question. Dilip, you've been now in NPCI for 15 plus years. You've seen this ecosystem develop right literally on the front row. And I'm curious to get your perspective that, like, we are at 2024, 10 years from now, what all possibilities we can imagine in a metaphorical way. You had spoken to me about tokens. You have spoken to me about how we can do many things significantly more efficiently than they are done today. But can you just give a vision? And it doesn't have to be all from NPCI. Like if you say India FinTech, we are in Global Fintech Festival 10 years from now, what all is possible?
So 10 years is fairly long, but I think that, when you look at the current, and thanks to RBI, RBI has been working very hard to see how do we increase the speed of money, right? And I believe the similar principle what happened with money will happen with the other assets. That's given, right? Now the question is uh, whether tokenization is the way out or there is some other technology. I don't know at this stage, but I believe as of now that looking at the way things are happening in the Western world, it might take that route, and the time, effort, and the cost would actually dramatically change to move the other assets like money in due course. RBI has started the CBDC pilot. That's a first tokenization effort of money, and I believe that unlike the Western world where crypto powers the decentralized finance, India has an opportunity to create a CBDC powered uh, decentralized finance system.
And just to double click on that, what does that mean? Do you think that we could potentially tokenize land records, fixed deposits, like or do smart contracts?
Yeah.
tracking all
I
these
think
things?
when I said that everything can be movable and everything can be digitized, it can be everything, virtually everything.
It's very powerful. Amrish, I'm going to refer to your tweet for a second. You talked about the thing that NPCI's innovation roadmap, but can you talk about the impact? Pine Labs has been working on payments for a very long period of time and has done not just innovation in terminals, but Pine Labs is like maybe 20 other businesses within the same thing. Can you talk about what is the impact of these roadmaps on the business and how do you see the entire merchant ecosystem completely change because of that?
I think that tweet, when I had sent it out, I'm obviously sending it out just praising what NPC has done for the country. I mean, just look at what's happening.
I hope everybody understood it.
If you look at what's happening just outside of where we are and getting out here, took me an hour and a half from Bandra West to come here. At the same time, when my mum wanted to get her car be ready for FASTag, I actually was out of the country and I could finish that transaction less than 1 minute. And that was really on the backs on the DPI infrastructure, what NPCI has set up, what the BBPS environment has created. We at the end of the day have the responsibility to build on top of that. Nowhere around the world does a not-for-profit body or a government institution create the highways so that you can run businesses on top of that. In most cases, a founder has to go ahead and build the highway and then run the car out here. We've been given a gift in our country where the highways have been created for digital payments, and we as founders really need to run businesses on top of that. Look, I'm actually very proud to see the recent result which PhonePe talked about. And PhonePe talked about an astounding result where this was a company which has been only been focused on DPI, build businesses around DPI, and have been able to create a business of scale and size. Honestly, we at Pine Labs, we take that approach into everything that we do. We want to follow the trend, follow the consumer, and follow the merchant. And if we can build value-added services using the existing infrastructure which has been created, I think we'll come out good. So that's the approach which we are building it. So Dilip, all praise to what you guys have been doing.
Dilip, just to be supportive of him, we are all fans of everything that NPCI does. It just keeps us busy all the time. And we are, I tell my team that our 2 years roadmap is defined by Dilip. They can talk to me for the year 3. Shalin, I'm going to come back to you. You've been investing in India for 18, 19 years now. Can you just give us a perspective of what have you seen change? And can you also give us from your vantage point, a decade from now, what does India look like? And it's very hard for a lot of founders who are building to just have this macroeconomic perspective of what you have managed to see from the front row and also kind of imagine for going forward?
Yeah, first, thank you, Kunal. Look, folks, it's been a total privilege to get a chance to partner with, hundreds of companies in India over these last 18, 19 years. My favorite anecdote is the year I started investing in India, India's GDP was 850 billion. This year, it's going to be 4 trillion. This is GDP, all of India's GDP, 4 trillion. And we are not yet on 2 decades, just shy of 2 decades, almost 4.5 times, 5 times. Digital advertising in India that year was 39 million M. All of India's digital advertising. iPhone wasn't yet launched. I led a small seed investment in Pine Labs in early 2009. I joke with Amrish all the time that my daughter, who's now 170 centimeters tall, was not born then. She's now taller than my wife is. So, basically, our big learning is while things can look a little bit slow, frustrating, sometimes it can be challenging to build a business. A founder's journey is incredibly hard. It is like the toughest job in the world. My favorite phrase to founders is, you chose the toughest path possible in life. So deal with the pain. Sadly, that's part of the territory, and then you got to keep building. But when you take a very long-term, multi-decade view, most people are surprised how big companies can become. I remember in one of our early investment committees on Pine Labs, somebody in the investment committee had said, it would be amazing if the company can get to 10 million in revenues. Okay. only later on to figure out many years later that it would be orders of magnitude bigger than that, right? So I think what happens is when you wear the lens of today, it's hard to imagine what might happen in the future. I think something similar is likely going to happen in India in the next 10 to 20 years. It's very hard to fathom today how big companies can become, but I can give you a very simple mental exercise, very super simple. Let's assume that both these companies here on my right and left can grow 20% a year for 15 years. That's not a lot, 20%. Both are growing faster. 20% a year for 15 years is 15 times. 20% a year for 20 years is roughly 38 times. So let's say 15 to 20 years, you could compound that. Each of these businesses would basically be north of $5 billion in revenues in 15 years, approximately order of magnitude. And a $5 billion revenue company today is hard to imagine, in India. But I think just like we have seen in the last, like I said, 18 years of my time here, I think we're going to be pretty positively surprised. And what Amrish just said about India having the digital public infrastructure and the rails is pretty dramatic. We now invest all over the world, in many parts of the world. We don't see this level of high caliber API infrastructure to do identity or moving money or so many other things like account aggregator and whatnot. I think all the people here are better equipped to talk about them. But these are very profound innovations, and these are only going to make sure that 20% a year can be much faster and likely can keep going for a lot longer. So that's my quick view, Kunal. Sorry for the long one.
But Chandra, I remember I was briefly in Sequoia for 2017, and we had talked about one interesting thing, that there are literally no company with $100 million of revenue.
Yeah.
What do you think is the scale of Indian tech ecosystem? How many companies would be $100 million revenue or $200 million revenue plus in India now?
Yeah, so in 2017, we had only 3-4 in our portfolio that had crossed triple-digit million revenues. I think we are at 45 now. I can only talk about, I think we have better information in our own portfolio. But more importantly, I think about 24 companies have over $250 million of revenue. Now remember, the kinds of companies we back are tech-enabled, so they grow much faster than market. But we are beginning to see really scale companies get built in our region, and then especially here in India. They're not big by India standards anymore. Earlier, our big company was still small by global standards. I think we're now beginning to have companies that are relevant, and the quality of product and innovation is relevant globally. Kunal, you and I keep talking about the fact that a CRED-like product doesn't exist in other markets yet. Amrish, we keep talking about the fact that so many of our products and services are relevant to other markets. And when Pine Labs tries selling in many other countries, they are seen as a product leader, bringing innovation. I think NPCI is now exporting, its software stack to many other countries. And I think it's a matter of great pride that we have this position of product leadership, product relevance, and scale relevance relative to global markets.
Perfect. How many of you over here are founders? Please raise your hand. Okay, quite a few of you. And how many of you are in businesses that has to do with credit? Please raise your hand. Okay, that's quite a lot. Amrish, question for you. Can you give your views on credit and fintech? What do you like and what do you dislike?
Look, I think, I mean, one very interesting way to look at that whole opportunity is if you look at what's happening with Nubank, Monzo, and then also with Revolut, right? What each of these organizations have done is started off as fintech, build very strong tech services which can disrupt pockets of the fintech space. And obviously, one of the largest revenue pools comes around credit. I really think that that's the formula to build a company which can scale and become huge. One of the other underlying factors, which is very interesting in each of the markets that they are operating, is the regulator and the government have embraced the concept around digital banks and have actually accepted digital banks quite early. Reserve Bank of India is right now evaluating that space. But as and when that space gets opened up for digital banks to start coming into India, there's going to be a natural progression for Indian fintechs to go into banking like services and then go into credit like plays. And then I think the opportunity is just going to be humongous for all founders building in that area. I really expect that over the next few years, there's going to be a new class of banks and financial institutions coming out of India, which will be fintech first. And that's going to open up completely new sets of opportunities for all of us.
Perfect. Dilip, can you talk about the next 5 years of UPI? We have already gotten to 14-15 billion transactions a month, but we still have a lot of Indians that have still to come onto UPI. We still have credit to take off on UPI as well, and we have all these new services that are getting different cohorts like kids coming in and other things kind of coming in. So how do you envision UPI 5 years from now that we have kind of gotten to this scale? It probably does more transactions than most networks in the world already. How do we see this from here to next 5 years?
So while lot has been done, lot more has to be done, needs to be done, right? That's the way NPCI at least looks at it. And I've spoken about it before as well. We are looking at 100 billion is a possible number that India should look at, right? And I don't know, it takes 10 years, 15 years, but 100 billion is a number. It's a potential for India. And I've done this math before as well, right? The 3x increase in the merchant side, 3x increase in the consumer side today gives a 9x multiplied effect, right? If you look at the velocity and other aspects. So I think it's a fairly achievable number, but lot more required to be done on that. The credit is absolutely going to be the backbone of this growth. We have launched now credit line. Just a couple of weeks back, we released the commercials, and I think the small ticket credit, high frequency credit is going to be really important for us to reach to that particular goal. The second is, I think we are fairly convinced that this recurring payments, the mandate QRs, the EMI QRs, those are the stories which will drive that usage, because today it's fairly tedious and physical process to adopt anything on the outlets, organized retail, unorganized retail. And I think that is the area where companies like Pine Labs have a huge scope to drive a software driven innovation instead of looking at a fixed infrastructure and those kind of things. I think we keep talking about it a lot, and I hope Pine Labs will drive more than physical to a software driven approach where it can be contextual, where it can be demand driven, where it can be real time, right? I think that's the way I look at it. The third thing what I look at it is, obviously, while we talk about, today we do about 1 billion consumer driven transactions, right? And which is 500 million financial, 500 million non-financial. And it keeps running in RBI discussion as well, that how do we actually scale up the capability to process this large amount of transactions. So I think there has to be more efficient way to deal with that. We have done something called offline transactions and those kind of things. So I think, but we still have to really get it to the scale to drive, the truly decentralized, distributed way. The transactions are happening, and we only get to know in a near real time basis instead of real time basis. So I think now there has to be a journey from a real time to near real time, in my assessment, because otherwise the scale what we are staring at it unimaginable.
Perfect. Chandra, you talked about earlier when we were chatting about what is the difference between tech, fin, and fintech. Can you just double click on that, and
Yeah.
what did you mean by that?
Yeah. So, folks, many of you are fintech founders. Look, in our view, fintech is a precision business. Okay, it is not a speed business that you try to blitz scale. So, and in our opinion, what happens is when financial services or fin meets tech, a lot of tech founders build these fintech companies. They try to build them the way of tech, which is grow very fast and raise a lot of money and so on. But actually, those are not the principles of financial services. The principles of financial services are much more precision centered. And so our view is, fintech should be built with a multi-decade horizon. Fintechs are not normally winner take all. All regulators want multiple market participants. They want a healthy, competing set, and they want consumers or merchant stakeholders to be served well by competition. So these businesses have to be built thoughtfully, in our view, Kunal, and not be try to build with blitz scaling or tech type DNA, but with a balanced DNA. Like I said, we always look for precision in fintech. Sharp proposition. If it's underwriting, very sharp underwriting, disciplined execution, and so on. And we don't look for speed and velocity and that type of mindset in the founders we try to back. So I hope that's helpful.
Makes sense. Amrish, you've seen credit, at least when it comes to merchants, products, services, kind of take off right in front of you, and you see that's kind of multiple participants from banks to now NBFCs and fintechs participating in that. In the ecosystem perspective, like where do you see the largest opportunities still not captured, and when it comes to, let's say, merchants and consumer worlds are still not fully integrated in some ways? So what are the pending opportunities that you see that are still big to be captured?
See, I think, again, if you actually look back into history and see how credit has grown, there are two main, maybe three factors which have the maximum impact on credit. One, speed of credit delivery. Second is cost of credit delivery. And third is the trust in credit delivery. So if you don't know enough about the consumer, and if you can't lend to the consumer, there's a problem. If it's taking you too much time and cost to get the money back, credit will not flow. And the similar thing is that if disbursal takes time. Look, it took HDFC Bank 25 years to build a book of the size and scale that they have built. It has taken about 12 to 15 years for Bajaj Finance to build a business of that kind. I think a fintech which can deliver to all of these three areas, which is deliver credit quickly, collections is becoming seamless, and at the same time has a very high trust score when it comes to delivery of credit, I think we would have solved for all of these things. And we are getting to see that in businesses, for example, yours also, where, credit is being delivered at a very low cost, but at the same time, it's a high quality credit. So first of all, I think we are started on that journey. I still believe that Indian consumer hasn't really adopted to credit and hasn't adopted to credit to help personal growth, personal growth, consumption growth, and economic growth. As we start to see Indian consumer use credit to better their own lives and the ecosystem around them, I think the Indian economy will benefit. It's a classic question around capitalism and socialism, which says if the consumption cycle increases, we as a company are going to go and we as a country are going to go and do well. I don't think so that has taken off enough right now. I think there's a lot more to be done to deliver credit to drive consumption in our economy today.
Dilip,
By the way, I think I think that has to be done with great deal of moderation. Whenever people are too bullish on credit growth, credit growth is, should, like, there is a very strong balancing force of doing it super responsibly, doing it very carefully, and so on and so forth. I think, like, at least I feel worried. People take credit in some countries, not in India. We have seen recently people take credit and then do real money gaming online. That's pretty scary. People are using credit to do futures and options online. That's pretty scary. And then you don't want people falling into a consumption trap. Like in certain parts of the world, credit has reached the point where it is used, but it is also abused. So I think, look, in India, the good news is the economy has had a healthy savings rate for the most part. People have been, fiscal prudence is very cultural to us. And I hope it doesn't get into a zone of overconsumption or a zone where, lots of people and households and so on. So I would just say that, yeah.
So I just want to add one point there. I think, and I fully agree with the views that it has to be a responsible way to drive the penetration, because it's a very risky business. But I think the biggest hurdle in my assessment is the collections, right? How do you really get these collections done? And with this UPI auto pay, right? The credit line on UPI, it's like a fully end-to-end life cycle product, right? Once you allot a credit and once the fellow is connected back to you, it's real time and connected, right? So the banks have the ability to do the step up, right, based on the repayment facilities, derive the newer business models like credit as a service, charge a small fee to give that credit line back to the customer. So I think this is the only way, in my assessment, it'll go to the hundreds of millions of the Indians, right? The traditional way of underwriting, giving money back to the consumer, collecting, is not going to work, right? So there has to be the way payments have transformed. I think the credit has to transform all by itself, right? Using the DPIs. Unless that happens, I don't see it's going to scale up dramatically.
I think, Dilip, what you're saying is true, that anything that is done inefficiently, as a country, we cannot afford it, because the cost of doing business dramatically goes up, and we need to be operating at literally in pesos to do a lot of the things that are done in probably dollars right now, right? So I agree with that. But I think Shailendra's point is an important one to kind of talk about. We have 100 million customers plus who are getting exposed to credit for the first time, technically, probably in their family. And I think the need to get successful fast, get rich fast, are balancing forces that we always need, because what we don't want is that this hyper efficient system delivers a hyper efficient result, and we are kind of because what we don't know how the human behavior works, we are just making the systems dramatically more efficient, right? So that's
but today also, I'm saying, if you look at credit cards, right, there are cash out which happens, right, and it will happen. But I'm just saying that what segment and how much value is into that. I'm just saying, till the time, in my own assessment, I'm not an expert in this area, but 5 to 10% will happen, right? Such a large country,
yeah,
it'll happen. But I think the remaining 90%, we know exactly where the funds are going on. It's valid P2M categories. The spends are happening. It's a healthy picture on overall, or a dashboard on overall where the spends are going. And I'm again telling you, start small and step up. I think that's the only way to expand the market.
That's perfect. I'm going to switch out of payments and credit. Yeah, go ahead.
And Kunal, look, I think the audience here definitely wants to hear from you, because you're one of the most insightful and constantly, right? Does everybody want to hear from Kunal? So can I take the liberty to ask one or two questions back to you?
Please go ahead.
And you guys should jump in. By the way, folks, for those who don't know, Kunal and I are supposed to do this talk. Then Amrish got FOMO because he had a talk at the same time, and he thought he would lose market share to the two of us. So he decided to join. Okay. And we were thrilled to have them join, of course, and honored to have Amrish and Dilip here. So
I have a question lined up already, okay? You get your question out of the way.
Okay.
This was not part of the agenda, but sure.
It's okay. So, Kunal, for everybody's benefit, credit is a very unique business. You had a bunch of unique insights with which you built CRED. Help unpack CRED for the users and also share what do you think CRED becomes in 10, 15 years. I think people will be pretty interested to know what you're thinking about that.
Yeah,
so
perfect.
sorry for disrupting some of your
Yeah,
flow,
yeah.
but I think we need to hear from you.
Perfect. How many of you over here use CRED? Thank you. Close to 70% market share. Not bad. The rest of you, please talk to the people around you and get on.
How many of you use CRED for UPI? This is the market share.
Okay.
I'm sorry. I want you to grow. I'm just saying. It's just
He's touched a very
reiteration.
sensitive topic.
There is always room for improvement.
We were late to the UPI journey, but some interesting stats for you guys. When we started CRED, we're going to be completing 6 years in November. We had less than 2 transactions per credit card customer in India on UPI when we started in 2018. Now, credit card customers who do a lot of transactions on credit card do close to 27 transactions on UPI every month. So that tells you that it's a very unique customer base that seems to also be on credit card and UPI as well. But just to explain CRED, I had built FreeCharge before, and all of you were part of the journey in some ways. You from Euronet, you were an investor in some capacity, and you were the key investor in the company. We realized that India's credit relationship was somewhat messed up. We were heavily penalizing customers for missing a bill or missing a due date or over leveraging themselves, but nobody was rewarding them for good financial behavior. We realized that if we create a platform that reminds people to be responsible with credit and ensure that they're paying the bills on time and create some kind of a recognition or reward mechanism for that, it should create a good thing. Fast forward into the journey, we are a dominant player in this category where most customers use CRED to rely on CRED to remind them for paying the bills on time and on top of that. So that's a way for us to acquire customers. But we actually wanted to build a unique ecosystem for the credit-worthy customers and kind of build multiple things on top of that. We never thought of ourselves limited to being a fintech. We see ourselves as an audience play. So we are focusing on the top 25 million families of India and building on many services for them. We recently launched a product called as Garage, where we allowed consumers to manage their cars on our platform, and we managed to cross close to 5-6 million vehicles in less than a year on the platform, and it makes managing cars better. And one of the most useful features that people find on our platform is challans. A lot of us drive and not know that we've got challans, and a lot of people use that. We've not figured out how to do BBPS on top of that and get the challan paid on our platform yet. Dilip, that's a task for you. Yeah, please note down. Yeah. We need that done. But the idea was that can we focus on a customer segment? They have unique problems for themselves. Their problems are not India problems, right? And can we solve for their cohorts in a better way? We hope to be partnering with all the players from the ecosystem. We do some work with Pine, we do some work with e-commerce companies, we do some work with banks, and make it easy. And we believe that consumer products can be built with a lot more finesse and a lot more attention to detail. We are used to these products that are built for mass customers, and we wanted to build something that is unique for them. And what we have managed to do is build a very large-scale business where we have a large merchant payments business. We have a large business where banks and NBFCs use to cross-sell their loan products on our thing. We are probably the largest in that category in terms of cross-selling. We are also a business where we have a small commerce business that we have built on top of that, a decent-sized insurance business, and a lot of merchants actually pay us to list themselves, and which becomes a reward on our platform. So we are building a unique company. It's very hard to explain what CRED is, but Dilip and I were fortunate to have dinner with the governor from US, and it was fascinating. He's like, this product is not even there in the US and it should be there. I mean, just to compare, they have probably $1.5 trillion of credit card spends and no app to manage their credit cards. But that answers your question.
Yeah, no, thank you.
I'm going to switch back. Quick comments from each of you. We have last 5 minutes. What are you concerned about in the world that we are all extremely optimistic? What are the things that we should be careful about? And anyone go first?
I think the speed of the tech is concerning for sure, right? Because we are building stacks after stacks, and it is from all perspective, right? Not only the core tech changing, but the skill set of the people, the way the AI is moving forward, cyber risk, right? So I think it's a fairly cautious zone we are entering into while we speak about scale, and it's a great thing to have, but I think it has its associated risk, black swan events, right? And I think we'll have to start creating strong mitigations on those. But Kunal, I think if just look at it as when you look at a future of fintech, and I think we keep talking about this fintech dominates or banks dominates. I think this line is going to get blurred in my assessment, and I think this universal banking will get converted to universal banking access, right? And while only fintechs are thinking like that from an access standpoint, irrespective of the bank which I bank with, but I'm sure there is a strong thinking within the banks as well now that yes, I have created a great bank, but I must create a universal banking access as well, because he's not using all my products, right? It's impossible virtually, looking at the number of banks, number of competitive products in the market. So I think that layer which fintechs have been building, which will get created, and I'm sure that fintechs will also try to evolve with the number of licenses which RBI is giving, or IRDA or other regulators are giving. So I think this line is going to get blurred in the coming years. I don't know, 5 years, 10 years, but we are starting it to see it.
Amrish, what are you concerned about and what do you see as the future?
I've been thinking, why are 80,000 people turned up for this event here in GFF? Kya rakha kya hai yahan pe? I honestly think it's about the ambition in each of the Indian in terms of what can be achieved. And that ambition today is getting to a level where it's going to become a massive force. And it's going to put so much pressure on the entire ecosystem around it. May that be on the regulator, on the government, onto banks and others. That one of my fears is, will the enabling ecosystem continue at the pace at which it has been doing till now to meet up to the ambitions that founders have and all of these people have out here to change the world? We've been very lucky, and as I said, I'm not joking about it, is that we've been very lucky that with an NPCI like body, what Mr. Nilekani is doing with his organizations, we are today having a scenario where the enabling ecosystem is running almost as fast as the ambitions of the young Indian today. Can that continue for the next 10 years, 15 years is an area which completely concerns me. I totally believe that we can, but what that will mean is lot more will need to be done in terms of our public sector organizations, our regulators, government, to meet up to the ambitions of the young Indian today.
Great point.
Very good point.
Yeah, Kunal, I'm going to say something which actually I think it's not so much a concern, but an opportunity I see that is unexploited. And you could say it's a concern to the extent I think we should get on it quickly. I feel AI is going to have a transformational effect on fintech, like in every other area. We are not yet seeing enough AI applications being used inside our fintechs, and I've said this at some board meetings as well, and to founders saying, look, when we meet companies in other regions, they are far further forward in trying to put AI into use, put machine learning into use, all the data that our UPI transactions are generating and all our merchant transactions and so on, should, I feel like in the India ecosystem, basis what we have observed, we feel most founders are not thinking aggressively enough about leveraging AI, and we should be faster on that curve. And I'm worried we are behind on that curve, relative to what we see in the West and some other regions. So that would be my, but I think it's probably the most compelling area of opportunity near term.
Shailendra, is it a money issue or is it an intent problem or is it a skill set problem?
I think my genuine view is that I think it's just that people have not understood its power and have not seen the benefits. And when, as a few people start seeing it, it will become a no-brainer to transform. Look, why shouldn't a fintech, like for example, Kunal, in your business, you have 12 million monthly transacting users. You should have AI figuring out what your user wants next and nudging them to buy the next product. So your upsell, cross-sell should all be AI driven, for instance. Or an agent should be there to do credit assessment or risk assessment or so many other things. You could do data collection agents and so on. I just feel we're not having enough board conversations in our startups about how you're leveraging AI, and we are finding that companies in other regions are somehow they're just prioritizing it a lot higher. So if you ask me, I think that's an area that we should get on with quickly.
Yeah, one of the things that I believe that AI will not happen till the CEO or the founder of the company becomes the chief AI officer, versus expecting somebody in the team to step up and do something. So it's one of those changes which can really accelerate you into the future, or you could be potentially impacted by it. I will just park one concern. I believe that as a country, one of the concerning factor remains is the female participation of labor. We have significantly lesser women working across all income segments, and that number is not increasing dramatically. We cannot become a prosperous country with just one gender contributing to the economy. We need to find a way to change this dynamic. No country has become prosperous with one gender working. We have to figure out a way to make that impact happen. Today, 90% of all financial products in India are only used by men. And this is something that unless we all collectively work to change, we are not going to get accelerated to Viksit Bharat. Cool. Thank you so
Very
much,
good.
everyone.
Thank
Thank you for being on this panel.
Thank you very much.
Thank you. Kunal, if I could request you all to come together for a group photograph, a quick group photograph, please. And meanwhile, ladies and gentlemen, let me remind you, we're about to get started with our next session, a very special address coming around the emerging trends in sustainable finance. That's our next session coming up in the next few minutes. I'm going to request you all to please be seated. But on that note, thank you once again, Kunal, Shailendra, Dilip, and Amrish. And with that, we'll take those insights forward. In fact, this particular session turns out to be like a segue for our next as well. Let me remind you all, our next session is about to begin within the next few minutes. I know it's a tough ask, but I'm going to request our audience to please clear the aisle. where we will get to understand fintech's role in driving the shift towards a greener and more equitable future. We have with us Mr. Alan Folemu, Regional Industry Director, Financial Institutions Group, Asia and Pacific, International Finance Corporation. I'd like to please invite Mr. Alan Folemu to please come on stage. And ladies and gentlemen, if we have your attention, can we have an attentive round of applause as well, so that we know that we are good to get the session started. And thank you very much, Mr. Folemu, for joining us at GFF 2024. Over to you, sir.
Thank you. Ladies and gentlemen, good afternoon. It's truly an honor to be here at the Global Fintech Festival. Today we're discussing a topic that I believe is not just critical for the future of finance, but for the future of the entire world. The role of fintech in driving the shift towards a greener and more equitable future. I know we've all heard the buzzwords: sustainable finance, green bonds, ESG reporting. But what do these terms really mean to us? More importantly, how does fintech fit into this picture? Let's start with the basics. What exactly is sustainable finance? Sustainable finance refers to financial practices that integrate environmental, social, and governance, that is ESG, considerations to generate long-term benefits for both the economy and society. It involves directing investments towards solving global challenges like climate change, biodiversity loss, and social inequality. At its core, sustainable finance consists of two primary components: climate finance, which supports environmental sustainability, and social finance, which focuses on inclusivity and equality. Around the world, governments, institutions, and businesses are coming together to push forward sustainable finance, recognizing that finance is a powerful tool for creating change. Here in India, we've already seen major strides in this direction. India launched its first sovereign green bond, valued at nearly $1 billion, marking a significant national commitment to sustainability. The Reserve Bank of India has been pushing for greater transparency with new guidelines on climate risk disclosures. And in the capital markets, we've seen innovative frameworks for blue bonds, focusing on sustainable water economy, alongside critical efforts to prevent greenwashing. Fintech lies at the heart of this transformation, providing the tools and innovations to supercharge sustainable finance. But it's not just about innovation for its own sake. It's about building systems that protect privacy, enhance security, and most importantly, serve people equitably. Now let's take a closer look at three key trends shaping this future. The first trend I'd like to highlight is financial inclusion, a concept that's not just about providing access to banking services for all segments of society, but ensuring financial products and services are affordable, delivered in a timely manner, and offered in a responsible and sustainable way. Fintechs are playing a critical role here by breaking down barriers and extending financial services to those who were previously excluded, particularly in developing economies. Today, they are offering solutions that are not only more accessible,
but also faster and easier. For instance, the International Finance Corporation, IFC, has been investing in early-stage fintechs like Mintify, reaching over 24,000 borrowers as of June 2024 in India, providing the unbanked and underserved with streamlined financing options that are more convenient and efficient. On a global scale, IFC has invested in hundreds of fintechs across Africa, Asia, and Latin America, driving financial inclusion at scale. The second trend is the rapid rise of green fintech products, that is, financial products specifically designed to address climate change. In Africa, for example, IFC works with M-Kopa, a fintech platform that combines embedded GSM technology with mobile payments to enable solar home system financing. This innovative pay-as-you-go model allows off-grid households to access renewable energy simply by using a mobile phone. It's a powerful solution that brings clean energy to homes, significantly reducing reliance on fossil fuels. Over 1 million solar home systems have been sold, avoiding 2 million tons of carbon dioxide emissions. Over 1 million individuals have gotten access to high-quality smartphones, enabling access to information and earning opportunities online. These fintech innovations bring strong climate impact into everyday life, encouraging people to adopt greener behaviors on a large scale. The third trend is the power of data, with fintechs harnessing this power in new and transformative ways. By disclosing their efforts and impact in areas such as reducing carbon emissions and promoting diversity and inclusion, firms can demonstrate their commitment to sustainability and social responsibility, which further attracts more conscious consumers and investors. And fintech is playing a key role in tracking and measuring the environmental and social impact of businesses and investments, thereby making sustainable finance more transparent and accountable. Take IFC's Malina tool, for example. It's an AI-driven platform that analyzes vast amounts of ESG data from emerging markets. This tool provides investors with deep insights into companies they're investing in, enabling them to direct capital towards those that are making real, measurable impacts. However, we also face challenges like greenwashing when companies misrepresent the environmental impact of their products and services. Regulators, including the Reserve Bank of India, are working alongside global counterparts to address this issue, ensuring that sustainability claims are credible and trustworthy. As we've seen, fintech is not just a tool for innovation. It's a driving force behind the sustainable finance movement. From promoting financial inclusion to developing innovative green products and using data to hold businesses accountable, fintech is playing a profound role in reshaping the future of finance. So where do we go from here? Looking ahead, it's clear that collaboration will be essential. Fintech companies, traditional financial institutions, governments, and regulators must work together to scale these solutions and amplify positive impact on sustainability. At IFC, we're optimistic. We believe that by investing in innovation and fostering collaboration across sectors, we can build a financial system that is inclusive, resilient, and sustainable for everyone. Thank you for your time today, and I look forward to continuing these discussions throughout the forum. Together, we can lead the way towards a greener and more equitable future. Okay. Thank you.
Thank you. Thank you once again, Mr. Folemu, for joining us at GFF 24 and also for sharing those very pertinent and holistic thoughts, especially around the key trends with regard to financial inclusion and much more. Most importantly, I believe that's where we are headed to when we're talking about a sustainable finance. And I think this is where the leaders come together to share their pioneering thoughts. That being said, we also have some time left before we set the stage for our next session. In fact, our next session will be all about responsible AI and responsible quantum computing in digital banking. So that's the theme. I'll have my team set the stage. And before we invite our speakers, I'd also like to take the opportunity to thank our amazing set of partners for this edition of GFF. We'd like to thank our cloud communications partner, Root Mobile, Diamond partner, Nabard, charging station partner, Protein eGov Technologies, Gold partner, American Express, Global Growth partner, Lightspeed, Silver partners, Peg Local and Exotel, and country partner, UK FCDO. We'd also like to thank our speaker launch partner, OneCard, diamond partner, Credit Saison, hydration partner, Rupee Ready, gold partner, EaseBus, silver partners being Findi, Confluent, and Beams VC, and bronze partner being Vakranji and Vampe. So while we thank all our partners, ladies and gentlemen, once again, let me inform you all that we're about to get started with our next session shortly. And the theme for our next session is all about responsible AI and responsible quantum computing in digital banking. We'll be having a discussion. We'll have three of our speakers come together. It'll be the format will be a panel discussion. So please stay tuned. Thank you. innovation and ethics. That will be the theme for our next discussion, which is why I request all the ones who just entered inside the hall, please come forward, take your seats. We'll actually get our speakers to come together and examine the ethical considerations and transformative potential of AI and quantum computing in digital banking. This particular session will also get to explore responsible AI practices, data privacy concerns, and the implications of quantum computing on financial security and transaction processing. We'll get the experts to come together in order to discuss the regulatory frameworks, industry standards, and also the collaborative efforts in order to harness emerging technologies responsibly while fostering innovation in digital banking. So yes, plethora insights waiting for us, but that'll only begin if I can request all the ones who've just entered inside the hall, please come forward, please take your seats. From the look of it, I've been informed that my speakers are all set. So that being said, you know, they say that to get the right answers, you need to ask the right questions. So to do so, to spearhead the session, we have with us Mr. Prabhu Rangarajan, co-founder, M2P Fintech. And joining Mr. Prabhu on stage, may I also please invite both of our esteemed leaders as well. May I please invite Mr. Nitin Chugh, Deputy Managing Director and Head Digital Banking and Transformation, State Bank of India, and Mr. Ray Harishankar, IBM Fellow, IBM Quantum Safe and Vice President, IBM. Ladies and gentlemen, can we have a round of applause, an attentive round of applause from our members of the audience as we keep the energy and the momentum on for the rest of the sessions and for this session as well. Thank you so much for joining us. Thank you, sir. And with that, let me smoothly hand over the proceedings to Mr. Prabhu Rangarajan to take it over from here. Over to you, Prabhu.
Thank you. Good afternoon, gentlemen. Thanks for being here. Thank you to the whole GFF team. This has been a massive, event. It's just getting bigger and bigger every year. So amazing. And I think this topic, it's pretty relevant to the whole theme of this year's GFF. Responsible AI is the theme of this year's GFF. And how do we bring in more inclusion, connect more people and do it responsibly. That's the whole theme of the whole event. So I'm sure these are two stalwarts of in their own right in each of their industries. Ray is an IBM fellow, and he's been doing deep research on quantum computing. So I'll rather start this session. I would request Mr. Ray to kind of give an intro or a quick peek into the world of quantum computing. I'm sure most of you would have heard about this phenomenon, but just the basics of quantum. What do you think quantum is, and how do you think it can help us? How do you think it, and every technology out there which has been if it has a phenomenal effect on the people, it better change or changes people's lives, right? Like that's the outcome that we expect out of every technology. So how do you see what is quantum, and how do you see quantum computing change our world in the near future?
Thank you, Prabhu. First, this is my first time to this event, and I am amazed at the presence here, the number of people, the kind of breadth and depth of topics. It's awesome to be here. So I hope you're feeling the same level of interest and enthusiasm that I feel as I walk the halls. So this is, again, great to be here and appreciate the invite. There are a lot of things in the questions that you just asked, Prabhu. So let me just unpack that a bit and see how I can simplify this. I know that the audience isn't going to be familiar with what quantum computing is. So let me start with that. And I'll try to simplify it in such a way that maybe you can relate to it. And I will connect it to fintech and finance and insurance and the impact of that. And hopefully at the end of that, you're going to feel an appreciation for what quantum computing is, but also be aware of the impact it can create. So the simple way of describing it is, I'll start off by saying what it is not. It is not, quantum computing is not faster classical computing. It is a completely different paradigm of computing. If you were to, I'm sure that all of you are aware of zeros and ones, bits. So think about it as an on-off switch, where there are two positions in it, on or off, 0 or 1. Whereas in quantum computing, you can think about it as a dimmer switch, where it has a 0, where it is dark, and then it has the other extreme, where it is fully bright, and then a number of settings in between. So instead of 0 and 1, you have 0, 1, and any value in between 0 and 1. That is what we call a qubit. So when you have bits with 0 and 1, you have qubits with 0, 1, and a value anywhere in between. So you can take 3 values or any number of those values in between. So therein begins the difference. And as I said, quantum computing is not going to anytime replace your laptop or your server that you have in the office. It will always work in conjunction with that. So this quantum computing is based on certain quantum mechanical and quantum physics properties. I won't go into that because that's a little complicated. And you might say, okay, fine, if I understand qubits, then what can I use it for? Why is it more useful, right? So we, as from IBM and Google and several other companies, are into the business of building quantum computers, right? So these are computers that are capable of managing these qubits and use them for computation. Very much like how you would use a classical i86 chip or whatever it is to figure out certain problems, right? But quantum is never going to do your payroll. It's not going to do your retail banking. It is not going to do a number of things that you would come to expect. There are certain kinds of problems that quantum is extremely good at solving. There are problems that classical computing simply cannot solve because algorithms don't exist. The mathematics or the science behind it doesn't allow it. And I'll talk about one of those. So factorization, for example, is one of those. So factorization is simply saying, if I gave you a number 65 and said, tell me the factors, immediately we say 13 and 5 as two possible numbers that you multiply to get 65. But classical computer does not have an algorithm to find that out, whereas quantum computer does. Why is it important? Hold that thought, I'll come back to it. That's one use case, right? There are other cases where quantum is better at solving things that classical computer does solve today. Case in point, optimization in general, portfolio analysis, fraud detection. These are all, and performing customer analytics. These are all things that classical computers do today, but they have certain limitations. Quantum can do it better. Quantum can do it much faster, right? So now let me bring it home and talk about examples where you can relate to, primarily being from the financial services industry. I kind of touched on it, fraud detection, right? So fraud detection models are usually plagued by false positives. And there are techniques and algorithms in quantum that will allow you to reduce the false positives by applying quantum machine learning. So that's a proven example that you can apply or begin to learn how to apply. Then there is risk analysis or your capital management. How much capital should you have as a buffer? And that's typically a problem that you solve right now in using classical computing. But because of the efficiency of quantum computing and the algorithms that are good at doing it, you can do them better. So you can afford to do with much better buffer for your capital. I talked about portfolio analysis. That's an optimization and portfolio analysis is usually a multi-objective optimization problem. You have certain number of parameters. You have to balance against that in order to arrive at the right balance for your portfolio objectives. Classical is good at doing it, but it assumes, it makes a lot of assumptions and in computing that. With quantum, you have a large capacity to manage multiple objectives more accurately at the same time. So your model definitely comes out looking much better. Now I can go on and on about a number of these use cases where you can apply specific algorithms that are very good in quantum computing that you can apply to banking. And you may say, who is using all of this, right? There are a number of companies that we are working with that have started to work with this. And many of them obviously don't want it to be public that they're working with us. But nevertheless, the ones that are openly, publishing papers and talking with us are HSBC, Wells Fargo, Truist Bank, Credit Mutual. These are all institutions that are working with us in developing solutions based on some of these use cases. So I know I've rambled on for a while, but hopefully you have a pretty good appreciation for what quantum computing is and how it is applied in finance. I'll make one last point and toss it back to you, and then maybe I can pick up this point later on. I did talk about the fact that there is factorization is a use case that I'll come back and talk to. That is actually a real problem that every one of you should be concerned about, right? I don't know if you want me to go into that now or you want me to go into that later as part of responsible quantum computing.
Sure.
But I don't want to hog the conversation. I do want to have you listen to Nitin as well.
Sure. So we'll double click on it. Thank you, Mr. Ray. Like it was definitely very interesting. I know this is post lunch session, so most people who were kind of half asleep would have definitely woken up to a new concept. So I'll probably touch upon a topic that we have, all of us have been discussing for the last couple of years, especially after the advent of ChatGPT. Everybody keeps talking about AI. Mr. Nitin Chugh, you've been responsible and you've been carrying the mandate of digital transformation for SBI. SBI needs no introduction in India. You service almost every pin code out there in India, length and breadth of the country. What do you think are areas where AI is helping you transform the bank and the lives of the customers that you service? And what do you think about, like, few words about quantum computing as well? Yeah.
So thank you first of all, and it's actually an honor to be sitting next to Ray, who's got 25 patents to himself, and he just shared with me that his target is 1 patent per year of years spent at IBM. So it's really an honor to be sharing the dice with you, the stage with you here. I think in AI, the way we've looked at it, we of course moved from traditional AI and now we are experimenting with generative AI. But along the way, we also found and realized that we need to put the guardrails in place, because anything that needs to be built on top of a foundational model, even if it's core banking, basic principles of lending, or let's say portfolio analysis, fraud management, fraud prevention, etc., the guardrails need to be put upfront. You can't, as an afterthought, come back and say that I wish I had done that, because accidents do happen. So what we've done is to create a framework, and it's been around for almost 6 years now. We call it the overall responsible and ethical AI framework, but in practice, it is called FEAT: fairness, ethical, accountable, and transparent. And each one of them have several set of subpoints to go through before any model is deployed. So what are the key things which are required? And I think the same discourse will also get carried forward to quantum, and since Ray works extensively in the quantum safe space, I'm sure the principles will generally remain the same. So things like explainability. Now, today there is ability to explain an AI model, but the model has to be built in a manner that it can explain itself to somebody who doesn't understand why the outcomes are what they are. It needs to be ethical, it needs to be transparent, it needs to remove all biases. If there are biases, either the model should self-correct. If it cannot self-correct, then there has to be a human in the middle. And today we prefer a human in the middle sort of a model. We prefer an oversight where our people are able to look at these models, calibrate them, and as and when any kind of a model drift happens, which happens over a period of time, there is an ability to pull it back through a recalibration process. So in fact, this has been coming up even in the industry conversations, starting with the RBI governor, talking about this about a year ago, saying that there should not be excessive dependence on algorithmic lending. And I think we have been trying to make sure that we are not excessively dependent by just making sure that there is a good amount of recalibration that takes place periodically. Now, what we haven't done as yet, and which is what we are trying to do, is to how do we automate that? And at the same time, because we are also dabbling with generative AI, of course, like everybody else, I think we share the same classroom, so our knowledge is no better than anybody else. Maybe especially the maybe the people who are working on the tech side, of course, know a lot better. But as practitioners, I think we are as literate or illiterate. But I think what we are trying to do is to again build generative AI based models using the same principles, because generative AI can be even more riskier. And what we are learning now is that there is an intersection of quantum and generative AI, which is now coming about. And it can either be very potent in a positive manner, or it can also have very, very negative consequences. In fact, as I was preparing for this, to come and speak on this panel, I also found that now there is another thing called biocomputing, which has gone from physics to biology. So quantum was all about physics, but now even biology is coming into this whole space. So I think these things will happen, but the principles will always remain the same. Banking is about prudence. Banking is about making sure that you don't take risks that you don't understand. And AI is just a way to deliver to that. And I think our principles, our value systems completely reflect that. And any responsible bank would be no different in terms of making sure that what they produce with AI or what they use AI for follows exactly the same principles.
Definitely, sir. Thank you so much. One key tenet that most large companies want to kind of do is to make sure the most deserved but underserved communities are served well, right? With so the beauty of a great technology or a phenomena is to make sure like the last mile delivery of a certain service, if it is delivered digitally, it kind of aids or it helps the the most deserved category of people, right? Have you seen AI helping in the whole inclusion story or reaching out to the last mile story? Have you ever seen anything or experienced any?
Yes, absolutely. So if you look at the traditional wisdom of banking, it relies a lot on experience, which is bad experience, right? So you say that loans in this area, you tend to go bad faster than some other places in, let's say, a downturn. Or loans from, let's say, this category of professionals are more riskier than the others. Okay, but these are old nuances. Today, I don't think people practice that as a principle anymore. If somebody does that out of just the fact that they have limited capital to use, that's a different situation altogether. But these principles have now been kind of left behind a lot, because there is an ability today to use data science to have a far better precision in identifying even the excluded set of people who otherwise would have been excluded with a broad brush. You can identify capable people, good people, better people, rather than saying that, this whole area is a black, red area for me and I will not enter the perimeter of this area. So those days are over. I think most lenders, not just banks, are taking very, very calculated steps into that kind of a domain to say that, okay, my data science is telling me very clearly that these are the 50% people that I can deal with. And the next 50%, maybe we need to go through a certain process and a journey to bring them up to that level, which is part of the whole financial inclusion, financial literacy, etc., etc.
Great. Thank you so much. Now, I mean, like changing gears back to quantum as a topic. Mr. Ray, like if you could touch upon some of the use cases or some of the efforts that you are doing in partnership with large enterprises who you're already working with, maybe some of the avenues that you're taking to see how can it, help transform the, current computing world.
So to pick up on the point that Nitin you made about responsible AI and the overlap with responsible quantum computing, we at IBM have come up with 5 principles, if you will, that we call as part of responsible quantum computing, right? And simply put, responsible quantum computing is quantum computing that is aware of the significance of the power as well as the effect it has, not just on the enterprises, but on a community as a whole. So the first thing our principle is it needs to have significant societal benefit. So we are not doing it, and that is the challenge with any new technology, right? If it's not managed well, then it has the potential to cause significant unintended consequences, right? So we are aware of that and want to avoid it. And talking about use cases, the second principle is we want to make sure that the use cases that we explore or we explore them with foresight. What we mean by that is we need to be aware of what the outcome of that intended use case could be, because technology by itself is neither good nor bad. It is how you apply it and what you apply it for that makes it good or bad. So we want to make sure that the exploration of these use cases are not for nefarious purposes, but for the overall good. The third is there is such a lot of hype that started off, and Gen AI is a great example of that. So we are keen in calling out that we need to represent the capabilities of the technology appropriately, not hype it up, not keep it on the low as well. Be factual about what it can do, so folks are aware, right? And then the last couple ones are about making sure that we make principled decisions in a consistent manner, that we cannot change the way we make decisions. We lay down some principles and we are guided by those principles in every decision we make. And that has to be consistent. Otherwise, there's chaos, right? And the last one is to the point you just made about how does it benefit the community, right? So we want to make sure that quantum computing is available to all the community out there. So we are keen in building a very inclusive and diverse community of people who can take advantage of it. So one of the examples, in fact, you'd be surprised to hear that India has a lot of quantum computing. We have this product called Qiskit. It's actually an open sourced piece of software that you can go in and learn how to use quantum computing. India has the most number of people signed up, right? And then there's a lot of quantum startups here as well. And there was a recent World Economic Forum study that came out about the quantum economy, and in that it calls out Telangana state as one of the examples where they're calling out that they have it's a case study of how well Telangana is doing in terms of making innovation, open innovation available, and how it reaches the masses, and how that is progressing well in that space. So my point is there are a lot of local examples on how innovation in the quantum space is being consumed by not just end consumers, but also being a fostering location for startups and the while. Now, you did ask about the benefits. I talked about a lot of enterprise level use cases, but at the end of the day, all of them have to end up benefiting the common consumer, right? So there are no direct use cases yet on quantum that will benefit a single customer. But if you think about fraud detection and your ability to do customer analytics in a more effective way, does have an indirect way of benefiting the clients at the end.
Perfect. So, and in fact, the whole way in which current underwriting models for when I spoke about financial inclusion, one of the key aspects as part of the inclusion is not just to connect people having a bank account or a way to kind of have access to financial services. It's also about how do they participate in the economy by being able to borrow money, and if they need to borrow money, the regulated institutions need to be able to kind of underwrite based on certain data sets. And for some of the segments of the society, these data sets are readily available. And if you have to kind of filter through and get access to these data sets, it's like basically trying to find a pin in the middle of the ocean, right? Like, so it's so vast. So I'm sure like once quantum and the technology catches up and matures, there will be enough and more avenues to kind of do large scale, data filtration and stuff like that. Now, changing gears back to AI, Nitin sir, I'd like to bring you in on one key aspect which is pretty core to banking, which is trust, right? People entrust the banks to safekeep their money, and that's how the whole economy works, right? Like, so how do you think in your personal experience, professional experience, how do you think AI can come in and add to the level of trust that the customer has? Will it be possible for customers to see more transparency from the banks, or what kind of steps do financial institutions need to take? And probably you can even bring in the angle of how a regulator would like to think, because you work very closely with the regulator as well. So what's your take on how the whole factor around trust, will people start trusting banks more with the advent of AI and quantum, or do you think it's going to get diluted, or what's your take on this whole trust as a topic?
So I think the bedrock of trust is inclusion. If you don't include somebody, that that somebody is not going to trust you. You can't go and say that I don't want to deal with you, but please trust me. So I think that problem is being solved now. So since we are an exclusive large bank, we've always enjoyed the trust of, we have 500 million customers, so we do, they have reposed their trust. Now we believe that their trust is certainly for safekeeping. There was a time, and this is not specific to SBI, but across the industry, when all the banks were introducing their digital apps or even web portals. It started with the position of not trusting it very much. I trust the bank, but I don't trust the application. Is the bank going to guarantee that the application is going to deliver everything in just the same secure way, like my money is safe? And accidents have taken place and they continue to happen. So when these things happen, there is a bit of going forward and coming back for sure. People, take 3 steps forward, come back 1 step, and of course there is usually this whole thing about, if you lost money, then why would you ever want to trust? And everybody knows somebody who's lost money these days. So I think it's a difficult problem and an ongoing problem to keep assuring that your money is safe in the bank, but the way you access the bank today, how are we making it more and more safe? And that is where I think some of these new technologies are going to be helpful. But one of the worries that we have now, and I think that is again something that we see happening across the world, is that there is hoarding of information that is taking place, which today might be encrypted, but later when quantum is available, quantum can go and crack that whole crypto, the existing crypto. All of that will get exposed. So we need to start preparing for that. If that happens in the next 5 years, it is very, very worrisome. If it happens in 10 years, hopefully we get a little more time to prepare ourselves. But then that is again the reason why we need to invest in some of these new technologies, and especially the place that Ray works for in making quantum safe. Those are the places we're trying to understand, because today they might be okay with, let's say, AI delivering to a certain level of personalization, and that is all right for them. And they don't quite care that, that it is increasing my safety or reducing my safety, because it's really not doing anything there. It might alert them, for example, for something which is fraudulent is going to happen, which is again more of a pattern detection, but that's all right. I think most people have got used to that. But to take it to a level where your entire credentials can get compromised, because that whole cryptography can be broken through quantum computing, and we have seen examples of that. And RSA, for example, was what everybody has used for the last 2 decades, and today even that can be broken. So I think before it becomes mainstream, before the bad actors get hold of this, we have to move faster and make sure that we find a way to keep people aware, while the producers of technology like IBM will make sure that computing is safe. But how do you keep the users safe? Because user has still not got access. Like Ray was saying, that there is no use case at the user level. But imagine if, let's say, this is going to be offered as a cloud service in future, and the computing actually takes place on your handset, on your smartphone, and that has the ability to either create a compromise or reduce a compromise. We will have to start preparing for that. So I think one of the things at least we've started to do is to also get into a lot of research. And we do have a partnership with IIT Bombay, where we've set up a hub for data science and analytics, and we are trying to research on some of these new technologies, so at least we form a view what we should be doing. Otherwise, it is not something you can go and pluck and buy and say that, oh, I bought an application which is going to keep my cryptography safe.
Absolutely. And you touched a very, key topic. This is called as post-quantum cryptography. It is actually, I would say, it's largely a threat that we foresee. When quantum computing can do, as Ray mentioned, it can do many, many mathematical calculations, arithmetic operations very, very quickly. The whole world of cryptography is based on, the fundamental arithmetic is where is on top of which the entire cryptography is based on. So the encryptions and the strength of encryption that we have today, you would have heard about RSA, you would have heard about AES 256, AES 512. All of these, terminologies are being used, but it will be meaningless when quantum computing is able to kind of process it and crack it in a minute or two. right? So all the encryptions that we have today to safeguard our data will be meaningless. So how do we prepare for it? Like I'm sure you would have worked quite deeply in quantum safe, as that is your main area of what do you call, like, focus. How do you, what's your take on this whole post quantum cryptography?
Well, I think that is a here and now use case of quantum computing that many are unaware of. And so thank you for the question, and thanks for the opportunity for me to sort of scare you a little bit, because that is what's going to happen. So going back to the trust, the word of trust, right? We trust every digital communication that we send, whether it be email, your airline booking, or your shopping, anything, any digital transaction that you send. You trust that nobody else can eavesdrop and listen to it because it is encrypted. Right? Very simple mechanism. And it's even more simpler when you really think about how the heck does that encryption work. And that encryption works on the point I made earlier about finding factors of a number, right? So finding factors for a number like 65 is fairly simple. We can do it in our head. But if I were to give you a 637-digit number and say, find me 2 prime numbers that you have to multiply to arrive at that, that is what RSA 2048 is about, right? It's impossible. I say impossible because there is no algorithm that exists in classical computers. You can put the most powerful supercomputer to work at it. It'll take 1 million years, and it's hit or miss whether it'll have a problem solved or not. It is that very simple math problem that all encryption pretty much depends on. There are derivatives of that, but this is the fundamental problem, right? Until a guy called Peter Shor in 1994, without even having a quantum computer, came up with an algorithm to solve this using quantum computers. So he says, oh, if I had a quantum computer that would do this and that, I can solve this, right? And he has. So now what happens is, when you have a cryptographically relevant quantum computer, what do I mean by that? A quantum computer powerful enough to break this RSA encryption. Because right now we have quantum computers that have been shown to break RSA 12, for example, meaning a 12-bit RSA code can be broken using Peter's algorithm. So we know the algorithm works, but it gets exponentially difficult as it gets larger and larger. So you're safe for now, but not for long. When such a powerful computer becomes available, it will break all encryption that you're currently using. What does that mean? It means your digital signatures can be compromised. I can fraudulently authenticate myself as you. All your blockchains become broken. Any digital communication that I can intercept, right now I cannot do anything with it, but with a broken key, I will be able to unlock that and look at what communication you have been sending. So there is a problem that exists here and now, I said, and that problem is called harvest now and decrypt later. What it means is, let's say I'm able to download a bunch of encrypted information anywhere, right? I'm sitting outside a cafe near a sensitive location, whether it be a financial institution, whether it be defense location, doesn't matter. Let's say I'm able to intercept and download the data. Now we are not worried because nobody can unencrypt that. Right? Nobody can take a look at inside, so it's safe. But if I were to store that and sit on it for 10 years, and then a quantum computer becomes available after 10 years, now I can unencrypt it and see what damage I can cause. So I'm harvesting the data now so that I can decrypt it much later to cause damage. Trust me, bad actors, typically bad state actors, are doing that today. So information is being exfiltrated, and we just don't know that it is being exfiltrated because no harm has come because of that yet, right? So this is where I'm saying I'm going to, scare you, because it is a concern. But at the same time, you may say, wait a minute, I don't see a quantum computer right now, so I don't need to worry about it for a period of time. You are correct. But if a quantum computer becomes available in the early 2030s, That is where we predict, that is where a number of pundits and other organizations are predicting that a viable quantum computer capable of breaking encryption will become available. At that time, bad actors can break this code and decrypt the data. So if the data that you have has value over 7 to 10 years, then you need to worry about it. I mean, credit card information, for example, you may not have to worry about it because you can change that in a relatively short order. But if you have longer information of longer duration, I'm sure there are financial, data that is really sensitive, that has longevity over 7 or 10 years. You really need to be concerned about the safety of that. So the point about quantum safe is identifying where you're using current cryptography. You mentioned RSA and other mechanisms. RSA was, I know, discovered in 1976, if I remember right. It's that old. It's nearly 50 years old, and we are continuing to use it. I guarantee you, you don't even know where you're using RSA in your software system. It is that old, right? It's embedded somewhere deep. But now you have to go rip it out and replace it with post-quantum cryptography. Right? And those new algorithms exist. NIST just 2 weeks ago announced a set of algorithms that you can use in place of current algorithms. Instead of RSA, you can use new ones that will work in this space. But it is a lot of effort to go and identify where you're using these algorithms and then replace them with new ones. So that is where you have to get started now. If you have any prayer of completing this work in the next 7 to 10 years, you have to start now. Because we recently did a study that average CIO, I think we surveyed over 100 institutions across the world. They said it'll take them anywhere from 10 to 14 years to do this transformation. But guys, we don't have 14 years, right? People are improving Shor's algorithm, rather frequently now. And so what used to be, 2035 is slowly left shifting. And now we are talking about early 2030s. And I think the most aggressive one was Gartner, who called out that 2029 is when they expect something bad to happen. So I'm not here just to scare you, but also to say that you need to start preparing now. So it's not like, everything is lost, but if you don't prepare now, chances are you are going to have a major problem that you need to deal with and not enough time to deal with it.
Thank you, Zirag. That's eye-opening for sure. Mr. Nitin, I'd like to probably I think we have a few minutes left. So I thought of hearing from you about a key aspect with all the technologies that we spoke. The key part that this becomes meaningful is how iterative it is and how soon are innovators able to catch up to these technologies, whether it is AI or quantum. You can pick and choose any one of these topics. But where do you see innovators participating in this whole game? How quickly do you see the iterations would probably get shortened? I'll give you a live example, right? Like back in those days, like when computing or I would say computing became mainstream in banking. This was 2.5 decades ago, when in the whole of 90s, we started computerizing the whole of banking, from core banking systems to ledger systems to all card management systems to everything. And then within a decade, we started seeing the innovators participating and new products coming out and various versions of digital products that are based on the digital framework coming out. And here we are now. We have the whole success story of UPI helping us, even the street vendor or flower vendor to participate in the financial ecosystem. So, but